quite sort of understand in India.
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade again. Now remember, in yesterday's trading session, we did see the Sensex touching an all-time high level. So we do have a new level of 63,588. The Nifty just came a whisker away from all-time highs, and even today we came very, very close to those all-time highs, and then the markets again pulled back, and you can see the markets, especially both the benchmarks, drifting lower in trade, about 0.1%, 0.2% in trade right now. Although the good part is that the Nifty still is hovering above that 18,800 odd mark, so down 33 odd points. The Sensex has 134 points down in trade at 63,389 currently. Now, when we see the mid cap and the small caps, they have also actually come under severe pressure. The mid caps that had been holding the fort for the last 2 or 3 odd trading sessions are now seen, down with about 0.8% or so, about 285 points of a decline coming in on that one. So taking a sharper beating. Half odd percent of a cut for the small cap 100 index at 10,787. Let's also look at the sectors. In fact, most of the sectors have actually turned negative in trade today. The Nifty Bank is just hovering around the flat line, about 0.04% higher in trade, but just about, say, one or two indices helping that Nifty Bank to stay afloat, I would say. But most of the other sectors have actually turned red. So financial services, the one is still holding up into the green, and that's perhaps supporting the sentiment of the Nifty Bank. But you take the rest of the sectors, all of them have actually slipped into the red. You can see the IT stocks on your screen, that's down by half odd percent. We're also seeing the FMCG seeing a cut of 0.5%, pharma down 0.5%, PSU banks the biggest decline here among the sectors, 1.3% of a cut for this one. Oil and gas down half odd percent. Realty, healthcare, all of them seeing a cut of half odd percent again in trade today. Metals are flat with a negative bias. We're seeing the private banks also slipping 1/10% lower in trade. So most of the sectors have actually slipped now as we speak. So the market breadth is turning negative as we speak as of now. Now, when we talk about the gainers and the losers, you will see pressure building up on the Nifty index, perhaps from Bajaj Finance, NTPC, stocks like Cipla, Tata Consumer Products, and even Grasim. These are the stocks that are down by 1.5%. On the flip side, you do have Divis Laboratories, Hero Moto, IndusInd Bank. All of them up by about 1% in trade today. So still holding up. The HDFC twins that led markets to support yesterday are still holding up about 0.7% higher in trade. BPCL, HDFC Life, ITC. These are the other stocks that are moving again in trade right now. 448 currently for the ITC counter, up by 0.4%. Very far and few between stocks, that are still holding up for the markets in trade today. But let's welcome our guest on the show. Mr. Abhishek Basu Malik joins in. He's the founder at IntelSense Capital. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, first up, I wanted to actually discuss with you, it took 137 sessions for the Sensex to really reclaim that all-time high level. Most of the sectors have also touched their all-time high levels, but it's the Nifty that every time it comes very, very close, again the resistance builds up. Why do you think that is the case? And is touching just that number going to be a mere formality? And after that, is it going to be a larger pause, or do you expect the run up to continue?
So, first of all, thanks for having me on your show. See, ultimately, that is the job of a resistance or the top of a market, right? I mean, the moment it crosses the top, you get that news on all newspapers, on all portals, everywhere, and people tend to become jittery. So over the last couple of days, I think the most common question that I've heard from investors is, the markets are at an all-time high, so what should we do? Right. So the normal tendency for people is to become a bit fearful. Uh, but if you tend to look at a larger picture, I don't see that there's anything to be really worried about. Markets will do its thing, plus minus 5-6% here or there doesn't make a difference. But on an ongoing basis, on a structural basis, I think we are in a good place right now.
Okay. What is the difference between this record high and perhaps the last record high that we saw in December of 2022? Because, a lot has changed. That time around, we were seeing inflation as a big worry. The crude levels were at a higher rate as well. We were looking at consistent rate hikes being taking place. Macro situation is changing at this point in time. So how would you really assess the markets amid macros and the difference from that time until now?
So let's look at what is happening around us. Okay, so let's look at the positives that we see first. Right now, if you see, now that our PM is in the US, there's a lot of global media coverage about India, and even without that, over the last, I think, 6 months to a year, global media coverage about India, especially Indian businesses, Indian economy has improved, right? FII flows have started coming back. So that's one part. The second is that, this China plus one theme is playing out, across boardrooms in the West. So a lot of companies are actually looking at investing in India, whether it is a Foxconn or whether it is an Apple or now, Elon Musk for Tesla, and so on and so forth. So people are looking at India in a positive way in terms of investment. Uh, Inflation has cooled off a bit. The domestic economy looks to be, sort of in a good shape. Interest rates seem to have peaked out. Oil prices have not sort of, done anything for the last few months. Uh, and the last time, and very importantly, I think this being a pre-election year, we see very large investments in infrastructure spending by the government. That typically has a tendency to boost growth. So these are all the positive things that we see, for India in the near term. Of course, there are negatives. India has a very large agrarian economy with the climate change problems, El Nino, etc. We don't know how that is going to play out. And the other thing is the rural economy still is not completely out of the woods from the post-COVID shock. So that's something that keeps sort of worrying me.
Okay.
And lastly, I think another important factor is, the two biggest components of inflation, which is oil and food, are both outside, the control of monetary policy, right? So we don't
Yeah,
can't really
yeah.
tinker with it, and food prices will come down. So that's something that these are things which are, challenges that India has. Of course, job growth, etc., is there. So net, if you look at it, I think it's, India is in a good space over the next 2 to 3 years. Markets are a reflection of that. Uh, and the fact that we've sort of consolidated for the last 1.5 years is actually giving strength to this market.
True. But I also wanted to ask you about that, why do you think that some of the large heavyweights have actually not really performed in this kind of a run-up? And finally, will they move from here on, like the HDFC Twins, ICICI, for example, Kotak Mahindra Bank, Reliance? They did not move at all, in this kind of a run-up. Will they finally, start participating in the next leg?
I would think so. I mean, if you look at HDFC, I think HDFC, has its own technical challenges in terms of the merger and the size of the holding in different mutual funds. So that is a technical overhang. I don't see that to be a big challenge over the next few years. If you look at ICICI Bank, it has actually performed reasonably well. It's just that the other smaller banks, other private banks, NBFCs, MFIs are doing catch up, and that's why you probably feel that the bigger players have not moved. They've not moved, relative to their smaller peers. But I think over the next 1 year, I think these things will probably play out.
Got that. But would you say that this could be the year for the mid cap and the small caps to take the lead?
I would tend to think so. But in general, I am not a very market cap, focused person. I think it's
Okay.
more important to look at businesses for what they are worth instead of, bracketing them as large cap, mid cap, small cap.
Okay, understood that. We have talked about a lot of themes that are we've been discussing, in our previous shows as well. BFSI, defense, manufacturing, capital goods. These are the kind of themes that we've been discussing a lot. But which is that one theme that you believe is likely to lead all the other themes in this rest of the financial year?
Very difficult to say what would lead, but I would still, consider engineering, capital goods, infrastructure, that space to be the best as of now.
Okay. Are you looking at any of these travel trends, QSR space, the new age tech space at all? Some of these pockets also, are they going to participate?
I think travel space has already participated. Look at all the hotel stocks; they've done phenomenally well. Uh, I mean, QSR, again, things have, most of them have done well. So nothing additionally that is likely to happen from the new age tech that you're talking about. I
Yeah.
think some of them are actually, sort of may have seen their worst, and things could get better if they are able to sort of post good numbers.
Okay, let me come to the stocks then. Wipro is on our radar today, especially because it's 12,000 crore rupees buyback has begun. Your own thoughts on whether investors should tender their shares, all of those investors who've been having the stock in their portfolio from the current price, it's down in trade again. So the premium is about 15 odd percent right there. The company is planning to buy back about 26.97 crore rupees at 445 rupees per share. That is through the tender route. What would you advise investors to do at this point in time?
Yeah, I mean, see, personally, I don't think Wipro is a very good company to invest in. They've been in a perpetual sort of catch up mode for the last probably decade. So if it was up to me, I had shares, I would tender.
Okay, if you had shares, then you would have tendered. So that's an indication. Perhaps if you're holding on to, you could actually take that benefit and pull out of the stock at this point in time. The other stocks that are on the move and which are in focus right now is from the metals pack, Tata Steel, ex-dividend. Your thoughts on the metal space as a whole, and Tata Steel, how should one approach?
I think again, like I said, infrastructure play that is going to pick up, or it's already picked up, has a lot of dependence on steel, on cement. So in the domestic market, they're definitely going to do well. Steel is more a global commodity, and the challenge is that globally, uh, a large amount would depend on what China does. So that's something that we need to look out for. Very difficult to call the cycle, and depending on what China or what happens to China's housing, etc., is how steel is going to behave.
Sure. Defense is another pack that we've been discussing quite a lot. Now, Mazagon Dock market cap has crossed 25,000 odd crore rupees, and it's the first shipbuilding company to achieve that feat. Now, we've been seeing a whole lot of defense names, at lifetime 52-week high levels as well. After this run up as well, do you really believe there is enough opportunity for investors to perhaps take fresh dip?
See, I think defense is going to be a multi-year play if what is happening continues to play out. But I personally think that right now it's probably sort of in a bit too heated a space. So I would sort of not buy fresh right now. I'd rather wait and let the stocks sort of consolidate or take a breather, and then I'll try to get in.
Okay, understood that. Well, thank you so much, Mr. Basu Malik, for being with us on the show and discussing all these different opportunities that exist for all the investors. Always a pleasure having you with us on Business Today TV. The market's still down in trade, about 155 points now down for the Sensex. It's hovering about 63,372. The Nifty down by 44 odd points. We'll have to continue to watch out for whether the last 1.5 hours we do see a bounce coming in from these dips, and are these dips bought, or are we going to see the markets coming under the weekly expiry pressure that we are looking at. The mid cap index, however, is now down by 1%, so slight more decline coming in on that one. We'll continue to track the market movement for you, so do stay tuned with us onto Business Today TV, and don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. Until then, thanks for tuning in.